Hey, welcome everyone to the next iteration of Café Bitcoin. We've gone video. You get to see our faces now. This is John Haar, my co-host. How's it going today, John?
What's up, Brady? Great to be here and on video. I might forget at some points that we're on video. You might have to remind me, but it's
I'll
all
let
good,
you
man.
know.
Good to be here.
Yeah, man. We have, as usual, a lot to talk about. We ran up yesterday all the way to 73K, not quite to the all-time high, just barely shy of it. We're sitting at 71,833 right now on my ticker. It seems like we're ready to just bust through that all-time high after 7 months of coiling up just below it, bouncing around. I have to believe that 58K was the average price of the last 7 months. And here we
It,
are.
it feels like that, certainly. And the high time preference part of me feels like we've been in a bear market since 3 p.m. yesterday. That's what it feels like, man. It's absolutely brutal bear market since 3 p.m. yesterday.
It's terrible. We're down like 1.5%. How do we even survive? But seriously though, after 4 years of bear market, I think that was my second full bear market. This is going into my third bull market since I came in during the 2017 bull run. And man, it's a long winter. It's a long winter, and so it is genuinely exciting when the price does get up here. I think the breaking all time high prices are by far like the time I get most emotional about price these days. Pretty zen about it otherwise, but it is just this. It feels validating, right? That you've stuck it out through this entire bear market. Here you are hodling through it all, stacking sats all the way down at 16,000 during this bear market, all the way back up to where we are now. So, badge of honor, like badge of courage for all the hodlers out there.
100%, man. Well said. And yeah, for me, 2017, class of 2017 Bitcoin, but it was different. Like I got in 2017 and the bottom fell out of that bull market so quickly. And I also was confused by the block size wars, didn't really understand what was playing out there. I kind of had the feeling of like, is this Bitcoin thing dead in, the first days of 2018 as the price was crashing? Not like will it go to zero and never be around, but I was just like, oh, maybe it's not going to catch on the way I thought it was. I kind of had that feeling.
Right.
So I didn't follow as closely in 2018. It kind of started to build it up maybe in 2019, and then 2020, obviously the Fed's response in March kind of was like a rocket ship for reasons to care about Bitcoin. But I would just say for me, like the 2018-19 bear market, I wasn't like thinking about Bitcoin as much versus 2022. I, certainly was. So yeah, for me, the 2022, 2023 bear market felt like a really long time. And that definitely does feel rewarding. Like you said, you get that badge of honor for sticking it out. So kudos to everyone who did that.
Yeah, I think going through 2 full bear markets is really where you've like earned your stripes, and you can go ahead and just call yourself an OG at that point, and just kind of lump us all in like the range of years, where you started starts to just increases a year, every year, and can kind of lump everybody into that OG status. So that's my take anyway. And I think you've earned it. If you don't, there can be debate about the label itself, right? But that one is, one that we toss around here in the Bitcoin community as a title of honor, right? Are you an OG? Have you been around for a while? And to me, that's 2 full bear markets. If you've been able to hold through 2 full bear markets, you're a hodler. You're one of us. You're an OG.
For
So
sure. Yeah, the OG term is an interesting one. I think there's always going to be debate about what is truly an OG. It's all relative. I think a lot of times people refer to someone who's been in Bitcoin longer than themselves as an OG. I feel like that's like the natural way they use the term. So it kind of depends whose perspective it is. I remember joking earlier this year when the Bitcoin ETFs launched and the price looked like it was about to rocket. And then we got thrown a curveball and it didn't. And it was like a month-long bear market before it started rising again. And I said to everyone, look, if you held through these 30 days of losses, you're now an OG. Congratulations.
yep, absolutely, man. Well, we've got some news to get through. About halfway through the show, we'll welcome some special guests who have created a couple of the most unique and effective and awesome pieces of Bitcoin education content that I've seen in my career life here as a Bitcoiner. So I'm excited to bring on the Tuttle Twins to talk about their latest Bitcoin episode that educates kids and entertains adults. So it'll be fun to talk to those guys. Let's dive into the news for the day. As we mentioned, we're at the all-time high. It feels like it's imminent at this point. So get ready to party and excited there. So let's jump into the Florida treasurer. There's a Florida treasurer who has, or the Florida treasurer who has endorsed a strategic Bitcoin reserve for the Florida Treasury. And he also encouraged state pensions to add Bitcoin to their funds as well. This is interesting. We're starting to see game theory within the United States, political game theory in the Republic of the United States, between states themselves, as is, intended by our Constitution. This is the way that we should see lots of like political development, legal developments, policies, approaches to healthcare, approaches to childcare, education, etc. There's this cauldron of 50 experiments going on in all of these areas throughout the country, and Treasury policy is not different. And this is seems pretty encouraging.
For sure, and I'm just reading the page over here, but credit to Dennis Porter for I think he was at least part of this. He's part of the Satoshi Action Fund, and either he was part of this or maybe he just announced it, but yeah, he's definitely been doing good work trying to get this on people's radars. Dennis maybe sometimes catches a little bit of flack for how he decides to announce things, but
Yeah, yeah.
all in all, I think he's doing good work, and this is how adoption happens at different levels. And yeah, so for a Florida treasurer, a guy's name is Jimmy Petronis, actually writes a letter to someone on the Florida State Board of Administration. Presumably, this is a decision maker when it comes to deciding will state pensions add Bitcoin. He wrote a letter basically making the case. And actually, Dennis Porter noted that the Satoshi Action Fund and their work in Arizona was cited in the letter. So this is kind of just like all these different things that Bitcoiners around the country, around the world are working on, kind of compounding. And it's good to see. Maybe there will be a state pension in Florida that will be one of the next to adopt Bitcoin.
I know Don Bay's been doing a lot of work on this with proof of workforce out in California and in other parts of the country too, traveling to do some policy advocacy and some education. And we do have a pension fund that has invested into Bitcoin. It's Wisconsin, if I'm not mistaken.
That's right. It's Wisconsin.
Yeah. So that's happened. The 0 to 1 moment has occurred. Now we're seeing the game theory kind of play out in other states. Now Florida, which is pretty exciting. Florida's a relatively big state, and I could see maybe Texas following. California might be a little bit down the road, but again, this is the game theory that we talk about a lot on the international stage, happening on the national stage. And there could be some realignment in terms of the power of certain states, the ability to maintain and develop, the kinds of services that the citizens appreciate and develop appreciate and maybe encourage people to move into those states as well, because they support Bitcoin. We could also see policies like how Bitcoin's treated in terms of taxes, in terms of capital gains taxes, in certain state returns. Maybe you don't have capital gains tax on Bitcoin. Things like this we'll see play out within the United States, just as does internationally as well. So it's just amazing to watch this all percolating, and it feels to me like this is the famous words, right? But it feels like that suddenly is around the corner, and it's obviously difficult to anticipate when it's going to happen, but when it does, I firmly believe that there will be an absolute rush to hold Bitcoin as an investment asset which will then be followed by using Bitcoin as a medium of exchange, and then of course a unit of account down the road. But the first step has to be FOMO into hodling Bitcoin, right? Everyone's like, I love putting those two memes together. FOMO is usually like related to like degen trading or something like that, and investing beyond your means. But here, if you say hodl FOMO, like these, I see this happening. This is sort of the store of value phase really building out. Everyone's afraid that they're going to miss the train to hold this pristine asset as collateral as an investment, and then once that that's the store of value is just accepted as true. Like this is an very important thing that we need to be aware of and probably need to be investing in. Then we'll get into medium exchange at a wide scale. So it's fascinating to watch, and that game theory is playing out, and I can't see any other way personally, and I would love to hear your take of this playing out than this rush, this FOMO to get into Bitcoin and hodl it.
Yeah, I think that will play a huge role. I think a few things come to mind. So the Lindy effect is real here. I think it just becomes harder to ignore as time goes on. Shout out Terrence Michael, Proof of Money on Twitter. He posted a chart. It comes from Charlie Bolello, who does these great macro performance charts. Bitcoin's at the top because this one happens to be sorted by 2024 performance, but you'll see that Bitcoin's basically at the top for, I think it's 11 out of 14 calendar years now. So just gets harder to ignore. But now copying your peers or groupthink, career risk, whatever you want to call it, that's all a real thing within the institutional world. And when we're talking institutions, we're talking pension funds, like the announcement we just mentioned. We're talking university endowments. We're talking potentially insurance companies, all different types of institutional corporations, obviously, all different types of institutional investors. All those things are real. They're not going to rush to be the first ones to do something. So I think just seeing some of their peers do it is massive. Just saying, hey, there's 2 pension funds who've done this already. Hey, there's one endowment, university endowment, who's done this already.
Exactly.
That coupled with the FOMO, coupled with, hey, the performance here is real. Hey, look, BlackRock is making presentations about why Bitcoin is a uniquely diversifying asset. I think that's all real. And then I'll try to do a positive spin here, Brady. You tell me if I'm being ridiculous, but one positive thing is that we kind of got the misdirection of blockchain. I'm not going to say 100% out of the way, but largely out of the way, or some of the misdirection on crypto, even whether it was like, you guys probably remember, there was a Canadian pension plan that made an investment in Celsius, which obviously blew up in 2022. They somehow got convinced to make that investment, but they wouldn't hold Bitcoin, right? So I think there was a lot of that confusion about, oh no, buy this crypto lender. That's the future. Don't buy Bitcoin. And then there's all these blockchain plays that have not played out. I think a lot of people learned the hard way that was not the signal. And I think that, coupled with everything else you and I just listed, will provide a much clearer path for institutional adoption going forward.
Yeah, it's building. It's building. And I'm very excited about it. What's next? Trump says Bitcoin shouldn't be subject to capital gains tax. This is a move that is sure to be popular with Bitcoiners.
It is. And I have to find where he said this. I saw it in a Sailor tweet, so I'm not actually sure what the total context was.
I saw the same thing. Right.
Okay. Yeah. And let's, just call a spade. Trump says a lot of things that may or may not ever happen. He may.
I mean, all politicians pander. It's pandering until something gets done. And so we'll see what happens.
Exactly. But we just wanted to hit on it as a news item. The fact that he's even saying it is somewhat newsworthy. Also, I will just shout out Howard Lutnick, CEO of Cantor Fitzgerald, did an interview with Pomp, and I'm a little more than halfway through it, but Howard Lutnick, super impressive guy. I'll just mentioning this because we're talking about Trump, talking about taxes and things like that, and there have been some crazy things floated out there, like reducing the income taxes or even getting rid of income taxes in favor of tariff and other sales taxes. I put this all in the category of like unlikely to happen.
Yeah.
Definitely unlikely to happen in a year, but you have to start somewhere, right? So if it's potentially going to happen, it has to start as talk, and they are
Yep.
at least talking about those types of things.
Pandering does matter for that reason, right? Because it's out there in the discourse, so it does make a difference. But let's see what actually happens. I would love to see this happen, of course, and I think it's certainly the way it should be. Bitcoin is a money, and we shouldn't be taxing money when you're using it. That's an interesting thing, though, right? Because right now in the U.S., it's being adopted and accepted by institutionally and in policy environments, state governments, federal government, et cetera. We've seen a lot of this happen over the past few years, and the difference is, right, that you have the state governments and the policy level at the federal government. Those things they have to basically come together, right? And we'll see when something like you have Trump advocating for Bitcoin as a money, therefore it shouldn't be capital gains tax shouldn't apply to it. Then you basically are moving or shifting the idea of Bitcoin in that world, right, from this investment, a commodity, and into a money. So I think that is important.
For sure, for sure. And then just two final comments on this particular topic for me. One is Joe Nakamoto put together a very funny video. It's October 29th on his Twitter feed. He is, if you guys aren't familiar with him, he's someone who has a ton of experience actually using Bitcoin as a means of payment all around the world. So he put together a very funny, like 5-minute video. He titled it "Bitcoin is not money." And he went through all the times that he has used Bitcoin to pay for something and kind of, sarcastically say, yeah, it definitely wasn't money when I used it in this country to buy this thing. And the other thing I'll just mention is that, Trump is floating the idea of no capital gains tax on Bitcoin and crypto gains. It's not completely unheard of. And I'll just point to, it was either 2022 or 2023, Senators Gillibrand and Lummis proposed, keyword proposed, it's not a passed bill, but they proposed a bill that I think had a $200, anything below $200 threshold was not going to be subject to capital gains if you used Bitcoin as a medium of exchange. So it's not completely unheard of to say, hey, this is money, people are using it. Let's not make them calculate their 37-cent capital gain if they buy a beer or a coffee.
Yep. We've got a couple of videos that we've queued up to talk about. So which one would you like me to roll with first? The CNBC clip? Well, they're both CNBC clips. Which one do you want to roll with?
Let's go with the Fed Governor Kevin Warsh first.
Okay. Let's see if I can cue this up. Trying to produce at the same time. Fed Governor, the Fed's next move. Okay, I think it's this one. Let's bring it up. All right. This is the one, John?
That's the one.
Different theories, Becky, about causes of inflation, the measures they use, and people in financial markets and media have tried to follow those. They said for a long time, you'll recall a few years ago, they were for flexible average inflation targeting. So inflation, when it was at 1.7, they said, we'll get it a little higher, and we'll try to bounce around 2. They seem to have gotten rid of that idea without replacing it, so they don't have a broad new strategy. Then they said for a long time, what really matters is core PCE. That's what we should focus on. But it's now running at around 2.7%, nowhere near their 2% range. About a year ago, they said, well, the best measure of inflation is now what they created a new category. And they said it was core services X housing. Well, that's in the 4s. Previously, Janet Yellen, and embedded in the Fed model, said what really matters is wages. And so we need wages to run at 3%, which is consistent with inflation running around 2. Wages are running around 4. So all of this isn't to say that all this is to say they don't seem to have a serious theory of inflation that's theoretical and empirical. It's not obvious that they acknowledge what their role is in prices. Instead, it has something to do with wars and pandemics. I think in a world this dangerous, in economic policy where fiscal policy is irresponsible. The central bank needs to be very clear about its reaction function, be clear about its goals, and not look like it's lurching. That's what put us in the mess we have.
I think that there's a lot to unpack in that clip, but I was watching this shocked for a few reasons. One is that he's a former Fed governor and coming out as very openly critical of the Fed and not in some esoteric publication. You know, he's doing it on CNBC, on Squawk Box, on one of their most watched shows, on one of the most popular financial networks out there. So that's just a big deal, number one. Number two, he's kind of validating what I think a lot of Bitcoiners have said in even more blunt language, which has been the Fed is going to come up with policies that they can just get away with.
Yep.
And, you know, they'll move the goalposts. Inflation as a target is kind of like this vague thing that they say, oh, it's this metric. Oh, we're going to change, you know, we changed CPI how many times over the course of decades. And Bitcoiners will put it more bluntly, but you kind of just heard a former Fed governor making the case of, hey, the Fed doesn't have a consistent strategy here. They move the goalposts. If you just even take them at their word, inflation is not really at where they said it should be, yet they still cut rates. So there's I think there's a lot of signal there. But then as a third takeaway, maybe the current Fed is realizing some of this, and maybe they're saying, okay, we're not going to be able to cut too many more times because we're kind of being outed as not even consistent with our own messaging. So maybe don't expect the Fed to cut by another, 300 basis points in the near term.
I feel like that clip is a Fed governor saying basically what Max Kaiser says very often, except in a more acceptable, politically correct, ready for cable TV sort of way, which is amazing. Amazing to see, or take Ron Paul as well. And Ron Paul had a tweet picked up by Elon Musk recently about inflation and the Fed, and how like his Elon's government efficiency agency should start with the big three of like agencies basically that are taking up a bunch of our money, a bunch of our tax dollars, requiring a lot of printing, and those being the military industrial complex, the pharmaceutical industrial complex, and then of course the Fed itself. And the Fed was his mantra basically throughout his whole career. So anyway, that's just to say that it's very cool to see these former Fed governors sort of parroting a Ron Paul message or a Bitcoiner's message on national TV like that. And it was more measured, obviously, but it's effectively saying they don't know what they're doing, or they do know what they're doing and they're lying to you, right? One of those two things. And that I think the former is probably giving them a little too much credit. I think there are plenty of people in the system, the Federal Reserve System, that understand that this, what inflation does, what printing money does, and the results in society. And I think there's, academic literature and history that's been laid out now for decades, justifying these kinds of policies that the Federal Reserve implements. And now there's this sort of foundation of theory that he mentions, that is, largely, if not completely, incorrect. And so I think what the Fed governor is saying here is that the theory of inflation, if the Fed even has one, is wrong.
Yeah, really well said. And he got close to saying what, Bitcoiners would say. He didn't go quite as far as saying, even having a 2% inflation target is bogus. I would love to kind of ask him that question over a beer and see what he says, but he didn't go quite that far. But it sounded to me like he was saying, even if we just take the Fed at their face value and they say this metric at 2% is what we're targeting, or this metric at 3% is what we're targeting. And he's just looking at it and saying, you guys haven't even gotten to, well, number one, you keep changing the metric over time, and that says something. And then number two, You don't even get to the target that you set for yourself. and then you're pivoting policy. And he's just looking at it. He's like, I'm confused. What am I supposed to make of this? And yeah, like you said, that was the buttoned up version of what a Bitcoiner might say.
Yep, absolutely. Let's take a look at this other clip. Here we go.
But Bitcoin ETFs have also seen a surge of inflows, adding over $3.1 billion in just the last 2 weeks, bringing the total market cap of those funds to nearly $73 billion since they launched in January. I've been speaking with analysts, and they say that with 1 week to go until the general election here in the U.S., investors are increasingly bullish that no matter who wins, it will be a net benefit for the industry. And already, guys, we are seeing options traders increase bets that regardless of who takes the White House, Bitcoin is poised to hit that 80K mark this year.
Okay. For what it's worth, I'm sure he wouldn't mind me saying this, but I saw Bill Miller last week. He's obviously been very bullish on Bitcoin. He's sort of, I don't know if we're going to use the word retired. You're never retired, as you know, in this game. And a lot of people have come up to him and said, look, you told us 10 years ago to buy this. Is it too late? And he said to them, Chris, I'm curious what you think, that it's like buying Amazon in 2014. Yes, it was up a lot from the IPO, but its big run was still to come.
I tend to agree with that. I mean, look, I'm of the age where people believed in gold in the 70s and 80s, and it is the gold for people 40 and under, and also Bill Miller and me. I mean, I do think it's a hedge against inflation. I do think there's limited supply. That's the whole gimmick. So don't scoff at it.
So Mac, this is.
I love at the end how he said there's limited supply. That's the whole gimmick. It's like he kind of gets it, but I feel like any Bitcoiner is probably like, oh man, you called it a gimmick? Like that's, it's so much more than a gimmick. But
kind of rings of Trump saying, "Have fun playing with your Bitcoins."
Right? Like, hey,
a
this
little
is more serious
patronizing.
Yeah, but before I go, what'd you think, Brady?
Yeah. Again, it's just I was thinking we have a lot of clips we could have chosen, for this conversation, and the fact that we have so many clips of people on these national, cable television shows, finance news shows, talking about Bitcoin every single day now, especially with price action here, and it's just going to continue as the bull run continues. We're going to just see Bitcoin's going to be constant topic on all of these shows, conversations, all outside of the shows, in boardrooms, in the halls of Congress, etc. Bitcoin is going to be discussed more and more and more, and it's beautiful to watch this happen. I think that Bill Miller is one of the billion. There's a handful of them, right? These extremely high profile, usually extremely rich investors and very successful investment managers coming out to say, this is it. Like, this. You need to look at this. You need to get this in your portfolios. Wake up, everyone. Like, it's yeah, man. Tell me what you think about the. I mean, that's kind of my general view. But yeah, go into your take. I'd love to hear it.
Absolutely. Yeah. And you just reminded me, just speaking of billionaires, speaking positively of Bitcoin, I'm sure we have some listeners out there who are familiar with or enjoy the All In podcast. And those, I haven't checked their net worths, but I think they're all billionaires, or definitely over 100 millionaires, successful, wealthy people. And they have talked about Bitcoin on their show in the past. Yes, they've gotten involved in some crypto stuff, so I'm not, justifying all that stuff. But in terms of Bitcoin, like, they kind of get the idea. They talked about the halving earlier this year. They're talking about 4-year cycles. They were talking about it as digital gold, and just on their show last week, they were saying how they were kind of on the nothing stops this train topic, and they were saying how Bitcoin is going to benefit from that. So yeah, pay attention. If there's multiple billionaires telling you that Bitcoin is something interesting, there's probably some signal there. In terms of specifically this clip that was referencing Bill Miller, I think it's pretty important, because one of the things that, people like you and me, Brady, who talk to friends and ex-coworkers, family, whoever, about Bitcoin, one of these things of, am I too late, seems to come up a ton. And there's different ways to go about answering it, but I kind of like how Bill Miller did it in a quick way of just saying, look, this is like buying Amazon in 2014. everyone knew about Amazon. The stock had already gone like this. But what did it proceed to do over the next 10 years? It kept going like this. Another way that I've heard this said before is at certain points in the past, Wall Street was looking for the next Microsoft. Well, it turns out the next Microsoft was Microsoft. You just look at what that stock has done, really all the big tech companies, what they've done. It's like, depending on the time period, 20 to 30% annual returns over and over and over again. And I think
the only thing that can keep up with inflation.
yeah,
or
exactly.
one of the only investments, which is, why we see so much wealth inequality in a fiat system, because the wealth accrues to the top, the already wealthy, simply because they own relatively scarce assets to the money itself. And most of Americans don't hold a stock portfolio, or are able to invest in real estate, for instance, or buy gold.
Exactly.
I mean, you could buy gold, but wouldn't be able to buy much of it. And so, if you look at the wealth inequality gap, it just gets higher and higher and higher as you proceed from 1971 up to now. These guys, these tech companies are doing great, but they're definitely the beneficiaries of inflation for sure.
Yeah, but it was common for people to say in 2014, oh, everyone knows about Amazon. I missed it. Microsoft has been successful forever. I missed it. And I think people are making the same mistake with Bitcoin. You are incredibly early. Bitcoin's a $1 trillion asset. It is 1/10 the size of gold. Adoption is just beginning. We are still early for sure.
Here we are. I don't see the Tuttle twins popping up into the studio just yet. So you and I will keep going, and we'll see if they show up. If not, we'll maybe have them on Friday or next Wednesday. And we can still play some Tuttle Twins clips though toward the end of the show, which we will definitely do for you guys. If you haven't seen the latest Bitcoin episode from the kids show Tuttle Twins, which is on the Angel Network, they do lots of great education, really entertaining. My kids love this stuff. I think my 9-year-old son said it was sick after we watched the animatic version when it wasn't even the fully completed version yet. So there was an original Bitcoin episode that went viral, like 10 plus million views, not even including the clips and everything. And so they did a sequel, and Swan helped by sponsoring, and it was really a lot of fun. So if they aren't able to make it today, we will make sure to have them on next week to talk about it, and I'll play a couple of clips at the end of the show. You sell Bitcoin. You're part of Swan Private, managing director. So you work with a lot of high net worth individuals, with companies, businesses, etc., trusts. So now that we have the ETFs, we've really widened this on ramp, right? So you can get exposure to the Bitcoin price in an extremely easy way now. How many of your clients, and I know, look, I'll preface by saying, I know that Swan Private clients are far down in the rabbit hole than, most Bitcoin investors probably, and especially at that scale. But despite that, what do you hear about your clients, or maybe people that they are trying to get into Bitcoin, buying an ETF, preferring an ETF over owning real Bitcoin? Do they understand the difference? Do they care?
Yeah, so I think you're absolutely correct that Swan clients typically have done a little bit more homework. They've spent more time getting educated. So they're probably already aware of why they prefer to hold what we would call real Bitcoin instead of ETF, paper Bitcoin, proxy Bitcoin, whatever you want to call it. So generally speaking, they're aware of the benefits. But I think, it's interesting. I do believe that the ETFs are going to be massive. There's going to be tons of people who get interested in Bitcoin and say, you know what, path of least resistance is for me to just buy this ETF in my brokerage account.
Right.
I think there's some parallel to GBTC here, which I'm not sure the first year it was around, but 2019, 2020, that's kind of when I heard about people buying it for the first time. And I know a ton of Bitcoiners who got their first exposure to Bitcoin through GBTC. And many of them bought it at a premium because they bought it in 2020. And then they learned some of the downsides to it. They learned that there's a big annual fee on it. They learned that it could trade at a premium or a discount because it was a closed-end fund. They learned that it's not real Bitcoin, and you can't actually get Bitcoin out of that structure. You have to sell it into dollars if you want real Bitcoin, take the tax hit, then go buy Bitcoin somewhere else, and you're paying fees and all this stuff. But it's still important to note that that was how they got into Bitcoin for the first time. And I think once they held GBTC, they start going further down the Bitcoin rabbit hole, and they start, I could list so many people, but they listen to Bitcoin podcasts. They read Saifedean's book. They start reading Lynn Alden articles. They read Parker Lewis articles. That there's a million other people I could mention, but I think it's like whatever amount of people get involved in the spot Bitcoin ETFs, there's gonna be a material percentage, and we can debate what that is. But there's going to be a material percentage that starts saying, wow, this Bitcoin thing is so much more interesting than just another ticker in my brokerage.
Right.
And they're eventually going to say, I need to hold some of my Bitcoin exposure in real Bitcoin. Maybe some of them even say, I'm going to hold some of the ETF because they like it being in their brokerage account, whatever. But I don't think they're going to be fine with 100% of it being in the ETF. And they're going to say, I want self-custody. I want to learn about this. What is multi-sig? What is cold storage? Like all this stuff. So we've referred to this as the top of funnel, meaning like the ETFs are this big top of funnel that people get into to start. And then some big percentage of them are going to come to, I want to hold the real thing in my own custody.
Right. Yeah. I think that big wide, on-ramp now that the ETFs just like 10x'd, right? We'll bring in a bunch of people to Bitcoin. This is like when you get your first, in this case, exposure to Bitcoin price action, like those people are going to feel like they own Bitcoin, right? Even though they don't, they have a paper Bitcoin, but it will have the same effect, I think, psychologically as it did when we went from 0 to 1 in terms of sats, right? They're going to start thinking about it more. Like you said, they're going to start asking more questions about it. They're going to find shows like this and all, amazing corpus of Bitcoin education that's been out there and built for the past 10 years. And a good portion of them, right? Who knows how many, but I would say maybe 10, 20% conservatively will eventually end up with real Bitcoin, just through education, right? And a lot of them will become hodlers. And I think the effect is greater than other like past bull markets, because again, it's so much easier to get onboarded now into the psychological exposure that is to Bitcoin. Let's call it price exposure, but you also get the psychological exposure. And when you have that, you're going to see a group, of hodlers. This time, I think it's much bigger, right? 10 or 20% of what's coming now. And it's just we know how this works, right? Like every bull market, there's a bunch of noobs who come in because of the price action. Some of them stay around, and then the floor for price is increased because we have a new cohort of hodlers, right? And that are able to withstand the bear market because they've educated themselves. So I think this time we'll probably have even more people in terms of, nominal, whole numbers, right? Coming in and being educated. And so the price floor hopefully will be, another, 1, 2, or 3 times higher in terms of raising than it was in the last bull market. So I think it's just sheer numbers at this point that people will transition from the ETF exposure into real Bitcoin. And I think it'll take Bitcoin only services like Swan, River, and Unchained, etc., to talk to or speak to or market to those ETF holders in order to bring them into the fold of real Bitcoin.
100%. And since you just mentioned, these cycles and prices rising and falling and creating kind of a new floor, just plugging in my computer here. I thought Corey actually had an interesting tweet on this particular topic because there was an interesting pattern of if you took the low of a bear market and then compared that to the next high in the following bull market, there was basically this pattern of each time it was getting cut in half by one. The next one was 1/5, so getting cut by 4/5. So there was one of those like trough to a peak of 550x, and then the next one was 110x, and then the next one was 22x, and then after that it would be 4.4. But if you take the previous low, so 16, and then you multiply 16 times 4.4, that's 70K. So we've kind of if that pattern continued, then that means like 70K would be the high for this cycle. So Corey was pretty early on this, saying, it's unlikely that this pattern is just going to keep going, because that means we hit like 70K or something and we just stay there. Yep. So it's just interesting. And I think people know this if you follow Swan. We're not huge into like looking at patterns of the past and saying, oh, they must hold true in the future or anything like that. But it looks like this one's going to be broken. And then Corey just said, this last part of his tweet, said, I don't know about doing better than 22x off the 16K late 22 bottom. 22x of 16 would be 350K. So Corey notes that 350K would break flat percentage diminishing returns, but he thinks it's unlikely. So he's saying unlikely to break 350K in this cycle. It's up for debate, but I thought that was an interesting one, just talking about price and prior patterns.
Yeah, I think that take is completely idiotic, to be honest. Like, I mean,
which one in particular?
Corey's. I think Corey's is good. I think that someone who might believe that we have this diminishing returns over, bull markets over time, don't understand that this is an exponential technology, right? Built on exponential technology. So it has, the network effects of an exponential technology in two ways, right? So one, it's, the protocol level, the technological level, it's built on the internet, which is in and of itself an exponential technology, which is built on computers, which is an exponential technology. You can go down, like the transistors, for instance, right? And so it's part of that sort of trend over time in technology that we just see very like continued over decades of exponential growth. So you have that network effect. It's part of that stack, right? And then you have the monetary network effect. And we know that money's the same way. Like you want to tend, like money will tend toward one. And in a free market, right? If we have a free market for money, we'll eventually end on 99%, of monetary use cases will be filled by this one money, because it's the most efficient thing to do. We have one internet, right? Because it's the most efficient way to operate a communications network. You don't want to be on some other, network, like the smaller one. You want to be on the one where everybody is. That's what network effects is all about. Same thing with money. To have an efficient monetary network, you need to have one money, right? Everybody's using the same thing. Everyone's on the same ledger, the same unit of account, all of that. Will create a much more efficient market than having 256 different fiat monies, right? And so since Bitcoin is borderless and it's an exponential technology built on this, exponential tech stack, it'll easily be able to spread throughout the world, right? Compared to a fiat money. You'll have, you'll see the exponential trend. So the idea that you're going to get some kind of diminishing returns is like looking at the, very bottom of the S curve and, saying like, oh, this is like, there's diminishing returns here. It's going up slower and slower. But then when you get to that asymptote, like that idea is completely like invalidated. And again, like Corey says, I think we'll see it here. Like we're not going to stop here at 70K. Like maybe we will. Maybe we'll go back to 58K, but we will still go higher than 72K with everything that's going on in Bitcoin. And it's inevitable. This is an exponential technology. You can't stop it. It's built on an open borderless network. It's itself an open borderless network, monetary network. So it's like a law of network effects, and we've seen examples of this over and over and over again through history. We know it exists and we know it happens. And that's where we're headed. And if you don't think that, and we're having some kind of diminishing growth over time, then you don't understand exponential technology. Like, I don't get it. At the beginning of the internet, people, maybe there was a wave at the beginning and it was increasing, in percentages, but in terms of adoption, but the growth in percentage, over any, like pick your cycle or pick your amount of time, was starting to decrease the amount of growth, right? but that's an early adoption, early a symptom, I guess, an outcome of early adoption, right? So once you get past that, things are much more accessible, right? The World Wide Web is invented, made things way more accessible for people. Browsers, online services, infrastructure to connect to the internet gets built out, like all of that stuff. That's when the exponential stuff kicks in. You've got to enable that through building out your exponential technology in the early days. And that's what we're seeing. That's what has been happening with Bitcoin since the beginning. And I think we're much closer to seeing more of an, continued exponential trend. And I think it's stupid. There'd be some diminishing.
No, well said, man. I think you gave a lot of good reasons and I like how you phrased it. It's people not understanding exponential technologies. And I bet you could probably apply that same statement to maybe why there were so many people who shied away from, like we said earlier in the show, shied away from buying Amazon or Microsoft or Apple a decade ago because they said, oh, this story has already played out. Turns out it hasn't. They still had so much more growth to go. Even putting aside yes, I do believe that tech stock valuations are juiced up because of inflation. That's true. But those companies do, provide a ton. Yeah. They produce a ton. More people are getting connected. Those are exponential technologies, like you said. And then, I'll just, last thing I'll say on that topic is when I just looked at the numbers, it was like earlier this year, I remember someone flagging that each cycle was like 1/5 the gains of that prior, like I outlined before. And I just said, okay, 16K times, 22 or times 4 gets you to roughly 65, 70K. And it's like, well, the ETFs launching basically brought us to 70K. Like there's so many more shoes to drop here. It just seems impossible that we're just going to hover between 58K and 70K another year. It's like, just to tie it into the Microsoft news, there was like shoes to drop. One of the big tech companies allocating Bitcoin on their balance sheet. Whether or not Microsoft does it December 10th is besides the point. But in the coming years, that is going to happen, in my opinion. One of the big tech companies, not like a MicroStrategy, like there's going to be some big company that says, hey, we're putting 1% of our assets into Bitcoin. That's going to open the door to just a ton of more adoption. Pensions, endowments, an oil producing nation might buy it in their sovereign wealth fund and talk about it. There's just so many other things that can happen, and that the price isn't just going to hover around 70K as those announcements are dropping.
No, it's a reflection of utility, and it just becomes more broadly useful as time goes by and all this stuff gets built out, right? So anyway, this is why I like to say it's inevitable. This is my reasoning why, much broader global Bitcoin adoption is inevitable, is the stack of, exponential tech. And it's just free from all these constraints, and just the corruption of fiat money. So it can just spread on the internet around the world. And so it will. I think the Tuttle twins are going to have to come another day, which is fine. But let's watch a clip from the latest episode, the Bitcoin sequel, and then we can talk about it. Let me see which one.
Let's do it.
All right, here we go. All right, it's going to go full screen.
Government, he would close Bitcoin down. The government hates that it can't close down Bitcoin. Nobody can. Ugh. So, the government is making a creepy knockoff called CBDCs. CBDCs?
Wait, so what are CBDCs?
Central bank digital currencies. Instead of being completely uncontrolled, this money is completely controlled.
Why would banks want to create their own digital money when they already control our paper money?
Because they can't control how you use your paper money. Once it leaves the bank, it becomes hard to trace and nearly impossible to control. CBDCs would allow the government to completely control the money, to spy on everything you buy. Imagine the government taxing you instantly, seizing your money whenever they feel like it. Say the wrong thing in a post, poof, you're a terrorist. And poof, no more money in your bank account. Today, most of the countries in the world are considering using CBDCs. And once this kind of power is unleashed, it may be nearly impossible to reverse it.
It's good stuff. If you are not familiar with the Tuttle Twins, it is a kids show focused on education, entertaining education. And they've done 2 Bitcoin episodes now. The first Bitcoin episode that they did was by far their most popular episode, getting over 10 million views, which is, I think, a very impactful way to educate about Bitcoin. You should watch the whole episode. It is on Twitter, on the Tuttle Twins profile page. I think it's on YouTube as well, or in the Angel app. It's a media network. I highly recommend watching it all. We might have time for one more clip here, but CBDCs, John. Look, I think Bitcoin is inevitable through exponential technology and all of that. It's going to happen, just as we discussed. But I also think CBDCs will happen, and they are happening already. And so there will be competition between the two. And I think, enforcing the use of CBDCs through fiat techniques that have happened over the years ultimately comes down to force will happen. This is their response. This is their sort of counterattack against a Bitcoin. So I think it's very Orwellian. It's I'm really glad. I'm very thankful that we have an alternative here. And this is, in my opinion, the only way. Bitcoin's the only way, and cryptography in general, Nostr, etc. The only way to avoid this, internet-based, modern networks-based surveillance system that's being built. And I remember being extremely just thinking that the future was going to be terrible, right? Very pessimistic. And this was before I found Bitcoin. And I was like, oh, this is going to happen, and that's going to happen, and it's inevitable, and there's nothing we can do. And it's pretty despondent. I think there's a lot of apathy out there, similarly, especially with our political system. But I read a couple of books that had a much brighter interpretation of the future, which was based on deflationary money that would inevitably. This is kind of what Jeff Booth writes about: deflationary money that would inevitably arise because of all this deflationary technology that we have. That you would be required to use some kind of deflationary money in a world like that. It's just how is that going to happen? Going back onto gold standards doesn't really seem to be a possibility, right? So this, Bitcoin's how that happens, and how we can, it's our weapon against the state, against state money. So what is your take on CBDCs? Are you, I don't know, man. It is a visceral feeling that can come from this stuff. Are you scared of it? Do you think it's going to, be successful? Do you think Bitcoin has a chance to, really push back against it as a way to empower us?
Yeah, I think CBDCs, if you just picked any tyrant or dictator in history and imagine if they had a CBDC that they could just, like the Tuttle Twins clip showed, that they could say, oh, your money's frozen, basically saying you had money and you can't use it, might as well be a zero. Oh, you can buy this, you can't buy that. Oh, we will stimulate these people and we will, unstimulate these other people. Kind of insane. Just again, pick your tyrant in history and just imagine how they would have used that. So, and that I think is usually a good litmus test for any policy put in place. It's like, okay, maybe your guy or girl is in the power seat, is in the White House right now. But if they enact some sort of program that they get control of, now imagine 4 years later, however many years later, the other side wins, and now they have control of that same program that you helped launch. Are you comfortable with that? Does that feel good? If not, then that's probably not a policy that you even want your guy or girl to be in control of. And I think CBDC is the perfect example of that. I'm optimistic in the sense that this is a funny one, that the existing banking system in the US is pretty powerful. And I'm not sure that they really like the idea of a CBDC because it potentially disintermediates them and what they do. Even if the big banks are used to be kind of like a tech provider that's like a diminished role for them. Because if anyone's holding a CBDC, if you or I have a wallet with CBDC money in it, it's basically a direct relationship with the Fed. I don't think the Fed's going to have the technology to, give us all a wallet on our phones. They would probably outsource that part to the banks. But again, I think that would be a diminished role for the banks. And I don't think the banks really want to see that. So that's number one that would probably hold up CBDCs in a country like the US. Our political system in the US should hold up CBDCs. That's the optimistic take. The less optimistic take is that there's been plenty of things that have happened in the US over the last 100+ years that have kind of ignored the Constitution. So you start to think maybe they can do other stuff. But then finally, just on this idea of Bitcoin and CBDCs being in competition, they definitely are in the sense of like they're polar opposites. But I do find it funny because I think we're so early in understanding Bitcoin that there are people out there who think Bitcoin's a digital money and CBDC is a digital money. Therefore, they're both digital monies. And what's the big difference? The analogy I've tried to use is that's like saying, what's the difference between East Berlin and West Berlin? They both have the word Berlin in them, but otherwise they're completely different things.
Right.
And you can't say, oh, we have East Berlin. Why do you need West Berlin? Again, they're totally different things. So I think there needs to be more education done on people understanding why Bitcoin is the polar opposite of a CBDC. But hey, we have BlackRock doing that education for us to a certain extent, and we have shows and plenty of people in the Bitcoin world doing it.
Okay, well, I went that direction so that we can play this clip to come full circle. This is called the Tuttle Twins Hope for the Future.
What hope do we have?
As more people, companies, and even countries start to hold money that no one can control, like Bitcoin, they may see the advantages and stop the creepy CBDCs themselves.
Uncontrolled money won't solve all the world's problems, but it will force the government, companies, and people to act more honestly.
When you can't change the money changes you.
Uncle Jamie wouldn't lie. Dollars are safe. A little inflation isn't fact, it's normal. Bitcoin doesn't do anything. Bitcoin is a pet rock. A useless, pointless pet rock!
That character is the niece of Jamie Dimon. Such a great episode. And then Jamie Dimon goes and plays with his pet rocks, and he's like paints them and makes them talk to each other and everything. And great stuff. Awesome scene. All right. Well, that's a great episode for today, man. I think we'll just drop it right there. We'll see you guys on Friday for Macro Friday. So we'll focus on macro stuff. Hopefully we'll have some nice charts to go through now that we're on a video instead of just audio only on Spaces. And check out the Swan app at swan.com/app, or just search Swan Bitcoin in your app store. If you haven't given us a look lately, the app is amazing. We've spent the bear markets of rebuilding. We spent a lot of it upgrading the app to make the best experience for onboarding your friends and family. It takes literally 2-3 minutes to go from nothing to their first sats. You can just stand there right next to them while they do it. And it's an amazing experience for pretty much everyone. We've pared down the KYC process to the absolute minimum. So check out the Swan app in your app store. We've also got IRAs. We've got Swan Private that John helps run, which is for high net worth individuals, corporations, etc. We also have a collaborative custody solution called Swan Vault, where you hold 2 keys and we manage one on your behalf, but only you can use it to sign transactions. It's convenient, so you don't have to get both of your hardware wallets together, which you shouldn't do anyway, just for security reasons, right? So for security and convenience, we can sign with a 3rd key. It also is the best onboarding experience by far in the industry. Absolutely incredible how simple it is to onboard to Swan Vault. So check out swan.com for all of our services. Thanks again. Thanks to Marathon for helping to support this show. And we will be back Friday. Next Monday, we usually try to have guests on Monday. So next Monday is Larry Lepard. So that should be a lot of fun. Join us next Monday for that. Same time, same place, 11 a.m. Pacific, 2 p.m. Eastern. Thank you, everyone. Take care, John.
See you guys.